Hello and welcome to episode 12 of Southbank Live. My name is Boaz, and today I'm joined as ever by John Butler. The purpose of this show is to do something much more back and forth with our readers and with our viewers. So do feel free to leave any comments in the chat box or to leave any comments if you're watching a recording of this below this video. Now, in this episode of Southbank Live, we shall be discussing quite a few topics. It's mostly the topical things of the week, and we do have quite a lot to talk about this week. Most notably being the what is being considered to be maybe an enormous default on the side of Evergrande, the Chinese property mega developer. Now, Evergrande has been a pressing sort of elephant in the room. I believe the Chinese financial regulator refers to such financial risks as gray rhinos. Unlike a black swan, which nobody can predict ahead of time, a gray rhino is something that is very obvious and very menacing, but which is, you can see and you can prepare for. So you do wonder what the Chinese government is going to do about this. But John, give us a bit of context, a bit of background for what Evergrande is, the Chinese property boom, and everything that the sort of teetering status of Evergrande represents.
Well, Evergrande, I suppose, is the best single representation we have of a more general concern that observers have had regarding Chinese growth for years.
Yes.
Which is that the growth was simply too turbocharged by speculation of many different kinds, property being a big part of that. And through the years, we've heard these stories about entire residential developments being completed and yet still essentially unoccupied, about shopping malls that never get a single tenant. Now, I mean, again, it's hard to get really solid data on this, but everyone knows that it was a growing problem for years. And yet, because of a generally low global interest rate environment, it wasn't necessarily resulting in any imminent concerns of default. But as you say, the gray rhino became more and more visible to more and more observers. But there's not necessarily a way to short these things. The entities that are involved, such as Evergrande, that are involved in arranging all of this and securitizing all of this and distributing it. This is not necessarily liquid stuff that one can be shorting like they can a liquid stock. And so it's very difficult to get good price discovery. And so as the gray rhino has become more and more evident, as you say, no one knows precisely what it will do when it gets spooked and provoked. But certainly when it does, it's probably going to cause a fair bit of damage. And now it looks like we've reached that point.
Right. Why do you think we have reached that point? The thing with Evergrande for me is that CCP, the Chinese government have been, completely fine with propping up the Chinese property market up until now. And I'm sure Evergrande has, been supported using the apparatus of the state in the past. So what is it that's happening now that makes this different? Why would it be that the CCP would allow Evergrande to fail?
Well, it could be that something has happened on the inside regarding the politics of all of it, and that a handful of people who are championing ever more support for Evergrande, for whatever reason, have lost favor. Maybe they said, "Oh, this is the last time we're going to ask for any support for this entity." And so it could be that some senior leadership figures in the CCP have simply lost patience and have decided it's time to pay the piper and to perhaps try to, deleverage and restructure this entity in a somewhat orderly way, rather than just, can bury their heads in the sand and allow the thing to completely blow up a la Lehman Brothers or something else that, of course, would make everyone look bad, right? And so I suspect there may be a lot of political intrigue going on here that, of course, I have no specific knowledge about. However, there might be a more general point, and that general point is this. We went through the whole COVID situation. China emerged from it relatively early on. There have been a few isolated pockets of lockdowns in China since, but they've been few and far between. The economy was booming on all cylinders. Late last year, China actually began to tighten credit conditions as a result of that. And yes, things have now begun to slow a bit. They're also curbing steel production, which is a huge portion of the basic Chinese manufacturing and infrastructure base. So, they've been really stepping on the brakes generally. So to now allow this one specific, albeit very large specific entity to come under visible strain, it is kind of consistent with some other decisions that have been made that they've just got to cool this economy down, maybe try to deleverage a bit and try to do it in an orderly way. But one wonders whether they can or can't.
Right. The thing is, though, John, is whether or not they do actually allow it to default, or they're simply allowing, some of the strain to be taken by it.
Maybe there'll be just some sort of haircut whereby everyone has to take a 10% hit on their holding. I don't know. Uh, if it is a politically driven process from the inside, which I think is highly likely, then that's the sort of talk that's probably taking place now. Not whether it should be restructured in some way, uh, sort of nationalized, maybe even as part of that restructuring some way. But to what extent will the investors in Evergrande and everyone else, if it's nationalized, how are they going to divide up that loss? And I suspect it will be in a way which is, again, largely a political window dressing, but no one should be under the illusion that someone is going to pay for this. There is no free lunch. You can't just wave a magic restructuring wand and make the losses go away. Those losses will have to be taken by someone. That will be a political process, but because of the CCP influence. But keep in mind, the way Lehman was dealt with, and of course the general global financial crisis of 2008, 2009, that was a political process too.
Oh yeah, big time.
I mean,
Big time.
it might have taken a slightly different form, or maybe a very different form than what the CCP will choose. And yet there are similarities. There were lots of nationalizations that took place in 2008, 2009, here in the UK, over in the US, in fact, just about everywhere.
Indeed, indeed. I think I wonder. I'm trying to remember whether or not the UK government still owns any of its stake in RBS. I believe Osborne was pretty aggressive in trying to sell it off when he could. But yeah, I mean it is very much a political process, which at the same time makes it very hard to predict because we're not dealing with market forces here anymore.
Right.
Thing is, though, John, I mean, Evergrande, this is something that, people are really into their macro stuff and really into looking into the Chinese property story, the Chinese growth story, the Chinese miracle, depending on who you speak to. I mean, they'll be familiar with Evergrande, but most people probably haven't until quite recently. And it makes you wonder, well, they've got $300 billion estimated in total liabilities to creditors. And that's total, so that's everything. I mean, it's not just bonds. It's not just securitized loans are outstanding. I mean, this is everything. And $300 billion, even in today's world, is a lot of money. And it makes you think, well, who are these guys that, that are owed $300 billion from Evergrande? And so when you're looking at, if, say, for example, worst case scenario, there is just a hard default. Maybe, we've come to a place where CCP is actually like, you know what, everybody that is holding the bag can get stuffed. We're just going to wreck them all. Imagine if we get that. Who is it actually that gets stuffed? Because from my understanding, and when you're trying to imagine what the knock-on effect of this might be, it's mostly Chinese high net worth individuals and Chinese, internal to Chinese funds that own a lot of this. So Chinese banks, which are sort of quasi-nationalized, a lot of them already. But a lot of it is Chinese high net worth individuals who don't actually have much political clout, which is why maybe the CCP would say, actually, it's fine if you guys get stuffed. Who is it that owns most of this debt? And if there is some kind of a default on it, what would the repercussions be, do you think?
Well, the banks certainly have exposure, and I don't know precisely what the breakdown is between the amount that was securitized and widely distributed to private investors and the amount that is held by banks and other large institutions.
Yep.
I don't know what that breakdown is, but you're right. This is what makes the politics of it potentially difficult.
Yeah.
Because the government, or in this case, the CCP, will end up picking and choosing, presumably based as much or more on political influence as any general concept of fairness. And again, this is also what was compromised back in 2008, 2009, which made so many people so angry, which was that it seemed that the bailouts of the major financial institutions were occurring at the expense of homeowners who found themselves defaulting on mortgages and whatnot. And so so fairness seems, to a lot of people went right out the window. But in this case, yes, I think a lot of these high net worth individuals are going to be taking a big haircut, and it may be a haircut that's disproportionately larger than that which is demanded of the banks. And even if the banks have to take it, they may nevertheless have capital topped up in some nationalized way, where ultimately the taxpayer, the Chinese taxpayer in this case, is the backstop. And so there may be lots of sleight of hand, but as I said before, that sleight of hand does not. I know it may make it more difficult to see just who's getting screwed in this restructuring, but someone has to pay, and I do strongly doubt that it will be a truly fair and proportionate restructuring, as it were, with respect to institutions that are clearly plugged in and individual investors who in most cases probably are not.
Yes. John, in terms of what this means for the Chinese growth story. So again, if we do imagine something of it doesn't need to be a really hard default, but there is something of a default. What does this say about the Chinese growth story? Because so much of the world, so many investors are really relying on China to carry on producing very solid economic growth. And that's what's kind of going to pull world GDP forward, because China is such a large economy. Growth has been quite anemic for many countries post-financial crisis, but China is the exception. What does this say about the Chinese growth story if we do see, some kind of default from Evergrande? Because Chinese property, there's so many crazy stories here from China with ghost cities, as you were talking about earlier, with malls that don't have any tenants. You've got all these tower blocks that are completely vacant. No one's ever lived there. Recently, there was something on Twitter, where they were showing, loads of these tower blocks just getting demolished. No one had ever lived in them, right? They were blowing up these buildings that had been freshly constructed. No one had moved in, and now we're knocking them down. What do you think it says about that story? I mean, is that narrative changing about China?
I think the Chinese, again, I suspect that the Chinese, notwithstanding the political difficulties involved here, I think there has been a growing awareness in recent years that the excessive speculation, largely in property, but obviously in other areas too, has reached a size that is potentially threatening and destabilizing of the economy generally, and someday would have to be dealt with. Again, making those decisions politically is extremely difficult, but I think there has been a growing awareness that at some point it would have to happen. I mean, take a look at China's incredible growth and success story in recent decades. It is very impressive, but certainly what history tells us is that periods of very rapid growth are also associated with the occasional boom bust. Rapid growth is great, but rapid growth and stable growth do not go hand in hand. So the Industrial Revolution is a great case in point, right? I mean, here in the UK and other countries that industrialized in the 18th, 19th, and 20th centuries, during the earlier stages of that, when rates of growth were truly, very, very high. I mean, some economic historians think that GDP growth at times was in the double digits, which is just astonishing. But some people think that there were periods like that, but those could be followed by very sharp declines, if not in the rate of growth, if not outright recessions. And so there was a lot of volatility in the business cycle, and that was sort of taken for granted. But then, of course, over the course of the 20th century, Keynesian style economic management became more and more popular, and notwithstanding that being briefly somewhat discredited in the 70s and 80s, it certainly has made a comeback in recent years. And Keynes is classic example of how you keep an economy humming along when it is entering a downturn is basically paying workers to dig holes in the ground and fill them in again, so at least they remain employed. Well, you might as well have said, build tower blocks and then demolish them, because they're actually the same thing from a macroeconomic point of view.
Big time, big time. And it does seem like, thing is, it seems like China has managed to get away with it, right? When it comes to paying the piper, China has continually managed to keep well, managing their economy, but keep it chugging forward at a very high rate, at least if you believe the official statistics. I mean, when it comes to what the repercussions of this might be, and when it comes to the cost of building tower blocks and then knocking them down again, what do you think what does that look like for investors?
Well, again, it may smooth things out, but what it also does is misallocates resources. Obviously, it's a huge waste of resources to build a tower block and then demolish it.
Yeah.
Okay. So it may smooth things out, but it lowers your potential growth rate. And over longer periods of time, that lower potential growth rate becomes a problem. And indeed, it can simply continue trending lower indefinitely as long as that sort of policy regime remains in place. All the head scratching about why rates of productivity growth in developed economies like the UK have trended downwards for decades,
Yeah.
oddly coincide, or not oddly coincide, if you will, with the growth of the size of the public sector and the growth in the size of the average tax burden.
Yeah.
And so, yes, it might smooth things out and might make recessions a little bit milder than they would otherwise be. But the long-term cumulative cost of those policies is increasingly evident to people like me who don't see the world through a Keynesian lens. That is, we see, don't get me wrong, we see the effects of Keynesian policies as what they are, but we also see this underlying collateral economic damage, cumulative collateral economic damage over time that mainstream Keynesians simply refuse to see and claim does not exist.
Yes. John, if we see the world as it is then, and we have been looking at, developed world economic growth is not as great as it once was for the reasons you've described. China obviously has gone down that path big time. It seems like we're following them really when it comes to the manner in which they're trying to stimulate their economies. But I mean, where is it? Where does one have to go in the world if we want to find genuine, decent economic growth? Because I think Africa is there's incredible opportunities there. We've got great demographics, etc. Well, where does one go if one wants to find, the good stuff?
Africa is an interesting case in point. As you say, the demographics are favorable. There are vast natural resources and also very diverse natural resources. Depending on where you go in Africa, there might be stuff in the ground, there might be stuff above ground. You've got lots of arable land, and so on and so forth. But the problem, almost universally, with a few, and I stress a few exceptions, is that property rights in most of Africa are still relatively weak. And it's very difficult to attract long-term investment capital, even domestically, where there's very little of it, or from abroad, it's even more difficult, and there's lots of it abroad,
Yeah.
but it's very difficult to attract that long-term investment capital if property rights are not properly perceived as secure long-term. Because the fact is, if you're not going to be able to realize a 30-year, 50-year, or 100-year revenue stream from a huge project, mining, infrastructure, farmland development, whatever it is, you're simply not going to pour the money in. Because when property rights are weak, you either make a quick buck or you don't make one at all.
Yeah.
And that is not the way you attract long-term fixed infrastructure economic investment.
Yes, we do seem to be in something of a conundrum there. Going back to Evergrande, John, if we look a bit more sort of near term, it does seem quite recent that the specter of Evergrande has reappeared. There have been plenty of times in the past that I can remember where Evergrande is featured as, oh, look at this. This is a debt bomb. This could be the default of the century that we're looking at. And it's a bit like Deutsche Bank in a lot of ways. It's this, it's a gray rhino, right? I mean, everyone can look at it and you kind of see the risks there. And you wonder if it'll ever charge at you, right? Because the Europeans have managed to keep Deutsche Bank going, and the Chinese have managed to keep Evergrande going. We're looking at more near term and what a default might be. I said earlier, I think a lot of the creditors are contained within China, but what the knock-on effects might be for the rest of the world. So we used to say that America sneezes, the world catches a cold. These days, when it comes to like commodity consumption and that, it's China sneezes, it's like global growth catches a cold to a large degree. When you're thinking of Evergrande and kind of the risk it poses, what might happen here in Europe, what might here over in the States, what do you think would be the result of some kind of default on the side of Evergrande, or just the perception of that? It doesn't need to
Yeah,
actually happen,
I
just the narrative.
I think the potential for this to spill over is actually larger, perhaps, than is generally appreciated. And the reason why has to do with the general development of the global financial and banking system in recent decades. And this includes, of course, coming out of the global financial crisis. And what has happened is that you have a fewer number of relatively larger money center banks or so-called strategically important or systemically important financial institutions who almost universally follow similar risk management policies within similar regulatory regimes. And you have, therefore, fewer but larger and less diversified points of failure. And so if something does begin to spill over, there's really not much containing it. Think about the Titanic. The Titanic had only a limited number of watertight compartments and watertight doors. And the way in which the damage occurred to Titanic therefore led to spillovers in a way that was not that was oddly enough kind of was known by the developer as an exceedingly designer as an exceedingly remote possibility, but one with such an unlikely chance of happening was therefore not itself protected against. And I think that's kind of the mentality here. Individual regulators in individual countries with a handful of large banks may think they've got things contained, but in fact, I suspect they aren't. And something as big as Evergrande can test the little leakages around the margins of the system that might result in just a small amount of cold seawater, as it were, hitting a hot steam boiler and causing an explosion, because that's what happens, right?
Right.
Even a small amount of cold seawater hitting an operating boiler can cause a steam explosion and then that boiler's useless, right? So in any event, something like that can happen with some leveraged hedge fund that had exposure to Evergrande that wasn't clearly known or understood, and that has a big credit line from, whoever it is, JP Morgan or Bank of America or Barclays, it could be anyone, right? You just don't know.
Right. Yeah, this is quite a specter when you think of it that way. I do wonder, it was what Archegos that was not so long
Yeah,
ago went bust and made all the banks look really, really silly, especially their risk management departments, because this was an incredibly leveraged hedge fund. It made some very big plays, made loads of money, and then suddenly lost all of the money, and it made all the banks look bad. But with something like Evergrande, when the size of that collapse, well, it's not really a collapse, but the size of such a default, the number of counterparties, one wonders, it's probably not just one hedge fund. I'm sure there's plenty out there that have used a lot of credit in order to gain leverage exposure to the Chinese property market and things like that. One does wonder what the damage might be. John, looking at that, because it's interesting that the narrative has arrived as it has quite recently. Do you think that it might be sort of the Chinese growth has been, well, growth this year has been not bad relative to 2020. Obviously, 2020, not many things look bad, relative
right.
to 2020. Do you think the CCP are just kind of wanting to get this out of the way, but while the going's good?
Well, again, I just don't know. It is about the politics, though, in terms of how it's going to be dealt with, and perhaps also the timing, why it's being dealt with now. There are probably very, serious political aspects to both of those. I think, however, again, it's worth pointing out that China did come out of the COVID shutdowns early. It recovered very, very strongly. It already began tightening credit late last year, more recently imposed steel output curbs on, again, what is one of the most important industries there. So clearly things were already trending towards trying to slow and deleverage the economy somewhat. And this they may have seen this coming as a result. Who knows? Maybe they're better prepared for it than things appear. I don't know, but it's possible.
Yes, yes. Yeah, you can't really, you never do know, and you never do know with the
No.
CCP what's really going on. Here we are, just in the UK, looking over at this enormous organization, which is very opaque with their data. We can only speculate, but that is, what the purpose of the show is ultimately for. It is, we're almost 25 past 10 now in the morning. It's a very, very fine Friday. Here in London. And moving on to our next topic, I think we should probably go on to inflation data, because there's been quite a raft of that recently. If you are watching this live, do feel free to leave any feedback in the chat box, or if you are watching a recording of this, do feel free to leave a comment, because we will look at that. It is great it is interesting to do this live. It is quite an experience. John, in terms of inflation and what we've seen so far, just recently, it's pretty hard to say that inflation is going to be a very short run thing when we are continuing to see a really sustained increase in the official statistics as well. These are the official ones. These aren't, the conjecture that people come up with where inflation might really be. Just in terms of the official statistics, it's looking pretty bad, right?
Yeah, yes, it is. I mean, keep in mind, nobody thought we were going to get here so quickly to these, generational increases in inflation rates that are popping up pretty much everywhere now. And yet, when you look at the pipeline, this is not over yet, right? You can look at wholesale prices, you can look at producer prices, you can look at all the logistical bottlenecks in shipping and everything else that are still, very, very evident. The Baltic Dry Index, a benchmark for global shipping rates, is still essentially the highest it's been, right, throughout this episode. So that hasn't come down at all. And those costs do. I mean, the longer all those pipeline pressures are there, the more and more retailers eventually have to accept the price increases that are coming through those pipelines, and you have to accept a hit to margins. No one wants their margins to get squeezed. You want to try to keep both, volume and margin as high as possible, because volume times margin equals profit for any given enterprise. But at some point, something's got to give. And we have seen, of course, a lot of price increases being pushed through onto consumers here, but not all, in my opinion. There's still way too much pressure out there. So two things, but it will be a combination of both. Some of the price increases do get pushed onto consumers. Some end up squeezing margins, and that hits corporate profit expectations. That can hit the stock market. So it's kind of lose when you get into a situation like this. And the word, of course, I've used to describe this in very general terms from time to time, and others do too, is stagflation. Not only do you get the inflation coming through, but you eventually get a growth hit from that phenomenon, because corporations see a big hit to their profit margins.
Yeah, not great. Not a good scenario to be in is stagflation. How much? Yeah, I mean, how long do you think that might persist, and what might change it?
Sadly, I think this is going to be very persistent, and I've written about this before. Basically, if you look back at previous examples of stagflation, some are very well known, some are less well known. And here in the UK, in fact, you've had multiple episodes of stagflation post World War II, not just the big one of the 70s. There were more than that. In any event, what you find is, when you're trying to understand what that persistence is, what you find ultimately is that there is some sort of negative supply shock, negative productivity shock to the economy, which is basically insensitive to all the typical Keynesian fiscal and monetary management guidelines and techniques and everything that they do. And so, the policymakers, they try to do this or that or whatever using the toolkit they've been given by mainstream Keynesian academia, and nothing really seems to work because they don't understand the supply side of the economy. The supply side of the economy is the side that exists and only exists because some investor at some point in time chose to build out some portion of the capital stock in order to make some sort of hopefully sustainable long-term profit. And the problem with these supply side dynamics is that if you get into a situation where investors have lost confidence in the underlying potential growth rate and productivity of an economy, they're just not going to invest, even as you get into these situations where clearly the supply side of the economy, the capital structure, is not working as productively as it otherwise might. Throw a bit of new technology around, throw a bit of restructuring around. Who knows? You might yield great results. But if you're not confident you can pull that off, in large part because perhaps you're not confident because the government is meddling in everything from the top down without really understanding what's going on, well, then you just sort of withdraw and you wait for the smoke to clear.
Yeah.
And that's kind of what happened in the 70s and 80s, right? It finally got to a point following some very significant economic reforms. Of course, they're associated with Margaret Thatcher. We all know that, that people in the UK got more optimistic once again about the prospects for long-term investment. But it took a long time to get there.
Yes.
Right. And so sadly, I think we're going to be looking at something similar this time around.
Yeah. Well, yeah, it's pretty bleak outlook, I guess. Yeah, stagflation is not really something that many people want unless you're really into your inflation hedges, I guess. I mean, for gold investors, stagflation is a pretty good time to be owning a load of Krugerrands or something like that. Yeah, it does look pretty bleak. I mean,
let me, however, draw a quick contrast there. Okay, supply side shocks can be horrible, but they can be dealt with.
Mm-hmm.
And one extreme example, and yes, this is a special case, and I will qualify it. One extreme example is post-war Germany, and you can also throw Japan in there if you like, but I know Germany better, so let's use that. Basically, at the end of the Second World War, Germany is a pile of rubble. Okay, right? I mean, there's barely a single operating factory. I mean, the place is a complete. It's a bomb site, literally,
yes.
Right? And okay, I mean, obviously Germans want to pick up the pieces. They want to rebuild, but of course they lack the capital to do it. Now, of course, the Marshall Plan is put together, and unlike the Treaty of Versailles approach to dealing with post-war Germany, they decide to do something far more constructive. So there is a lot of capital pouring into Germany, but this is important. That capital is then utilized in a way which is very market-driven. Very market-driven.
Yes.
It is not. I mean, the money may be arriving as a top-down parachute of money or helicopter drop, if you will, okay, of money. But the Germans actually developed that in a very, very unregulated, free market way, which is kind of legendary, really. So instead of just going boom, bust, because they're punting around and speculating, they're letting the market kind of rebuild itself, letting the economy rebuild itself. And they do awfully well, right? Germany does not end up in some boom bust situation. They go from strength to strength to strength. Of course, there's the occasional setback. It can be done. You can deal with supply shocks in a way that allows the market to sort it out. But sadly, that's frequently not the case. And the mentality of policymakers today is definitely not the way they think.
Yes, you don't see many people these days citing the German economic miracle.
No.
Sadly, but
Yeah.
this is the world where we live in, John, and we got to deal with it as it comes. There's another aspect of this, because talking about stagflation, obviously this is good for kind of people who produce the basic inputs, because they can respond to price increases very rapidly. Interesting story in commodities these days, which I know you've been looking at closely. What is it that we should be looking at?
Well, I think what's interesting now is following a period of just almost universal commodity strength over the past year, right? Coming out of COVID lockdowns, demand soared everywhere. There were supply constraints and bottlenecks almost everywhere. And the net result of less supply and more demand obviously is higher prices. And you saw the breadth of that across the commodity spectrum. It was historic, right? You usually do not see that much breadth of commodity strength. You saw it everywhere. And that went on for a while. That was quite persistent. But what's interesting now is it's early days yet, but we're a couple months into clear divergence now within commodities. We've seen some very sharp corrections in lumber and in iron ore, for example. Yes. We've seen momentum lost in energy, which did briefly have a strong recovery, and now it appears to have leveled out. We've seen certain key agricultural benchmark prices finally starting to head lower again, following a period of being very, very strong, but there are still a handful of pockets of strength. Coal prices just hit a new yearly high,
Yeah.
and there are a couple other pockets of strength out there. But you are seeing divergence, and this is just so characteristic of major macroeconomic swings in the global business cycle, or for that matter, a domestic business cycle. But we're talking global commodities here, hence global business cycle. You tend to see divergences like this when you have reached general turning points. A few things head down first. A few other things merely lose a little bit of momentum to the upside, and some other things keep climbing. But the divergence is now very evident, in my opinion. And so I think we have crossed the turning point now into a general global downturn. The peak in this cycle is behind us now, I believe.
Damn. Yeah. Looking into that a bit further, coal, it's pretty ironic that it's risen so much in price considering the general political atmosphere regarding renewables. What do you actually think it is that's really driving that?
Okay, now I think there's two things driving the coal price. One thing is that I believe some of it could be Chinese stockpiling. And the reason why is because even though the Chinese government, as discussed earlier, has imposed steel production curbs to try and cool that sector of the economy, that doesn't mean that the mills aren't nevertheless continuing to take delivery of coal regardless, and then have it there for a rainy day.
Yeah.
And one reason for that could also be the fact that the Chinese and Australian governments, Australia being the primary source of Chinese coal imports, those two governments seem to be going from dispute to dispute at an increasing rate. And indeed, those disputes have been around coal from time to time. I wonder whether China is concerned that there might be a major trade bust up at some point where coal almost stops moving and that they need to have a strategic stockpile. And sure enough, China designates coal as a strategic resource. So that's one reason that I think may be supporting coal prices here, even as iron ore prices are coming down because of the steel curbs. The second one is that, oddly enough, here we are, and it's September in the northern hemisphere. Business planners, and that includes public utilities, need to plan for winter. And as you just said, last winter, several countries received a very harsh lesson that neither wind nor solar nor most other renewables are dependable sources of base power when it gets cold and when it gets blizzard-like conditions
Yeah.
that completely obscure solar panels and completely shut down windmills and whatnot. That includes Germany. That includes most of Eastern Europe, to the extent they have renewables capacity in Eastern Europe. Germany does. Not all of Eastern Europe does, of course.
Yep.
In any event, guess what you do, right? If you're concerned about being too dependent on renewables heading into this winter, you're also going to stockpile coal. And get this, I mean, even Germany, the greenest of green countries, or so it claims to be, they actually are preparing to ramp up capacity in their coal sector preemptively to try and avoid what happened last winter. They're already doing it. And so I think there may be some seasonal northern hemisphere demand for coal out there as people quietly prepare. And I stress quietly because it's not politically correct these days for any government to take credit for stockpiling coal for a rainy day, as it were, because they'll get grief from the green lobby. Oh my word, why are you stockpiling coal? Yeah, the fact is, no government wants its country to suddenly face a power blackout because that's politically very unpopular. But you don't want to admit you're protecting against that by doing something else politically unpopular, such as stockpiling coal reserves.
Yeah. Yeah, that is interesting. It's yeah, the Chinese Australian dispute in particular, with Australia being a big coal producer, that yeah, it makes a lot of sense when you describe that, John, because just yesterday, we've got the news about the US, Australia, and UK coalition to make sure that Australia now has some nuclear submarines. Uh, and obviously, this has not been taken very well, not least by the French, of course, but not very well by China. This is very much part of the US's containment policy being rolled out. And a lot of people thought, this was all about trade wars. It's obviously a lot deeper than that. This whole global maritime strategy. But on the topic of nuclear submarines and nuclear, we're talking about commodities. It would be remiss not to mention uranium, which is something you've been looking at recently.
Well, I think a lot of people have been looking at it recently because the price of uranium has been on a tear. I mean, we started the year at roughly $30 a pound, and now we're pushing $50 a pound. And most of that's occurred in just the past 6 weeks or so. I mean, this is it's a historic rally in uranium. Now, I don't think that we're seeing uranium stockpiling suddenly to prepare for this winter. Uranium is a much longer term market than that,
Yeah.
as it were. I think this has much more to do with expectations of a more longer term sort of expectation that the global level of uranium demand is simply going to remain elevated for a sustained period of time, and that you're going to have much more nuclear generation coming online. There are currently 52 nuclear power plants being constructed. Most of those are large facilities pushing out many thousands of megawatts. Because those are seen as generally more efficient than smaller plants. Roughly half of those are being built in China, India, and South Korea, where, of course, a lot of the world's manufacturing and exports resides. And if you want to be competitive in manufacturing exports, you need to have low cost, reliable base power generation, which, of course, is what uranium provides. And you also have this year now the world's first for general private investors physical uranium trust that was set up earlier this year. It's listed in Canada, I believe. And so anyone who wants to get exposure to the uranium price can do so through that trust. But I suspect this is driven largely by governments who see uranium as a strategic resource, who are increasing their rate of acquisition to prepare and stockpile for the growing infrastructure that we're going to see over the coming couple of years. So in other words, I don't think this uranium spike we're seeing right now is just a flash in the pan. I think it represents a more of a strategic development and strategic realization on the part of investors, but also the actual actors in the market, that uranium demand is simply going to rise and remain elevated for a sustained period of time.
When you say the infrastructure that's going to get rolled out in the next couple of years, you're talking about much more nuclear energy adoption?
Well, I mean, the decisions for these 52 plants were actually made long ago. These are plants under construction.
Yeah.
There are many more than 52 plants that are being discussed and designed, and that may eventually enter construction. That's going to be further down the road. But so you have a large number of plants, and again, roughly half of those are concentrated in just three big manufacturing and export economies. So that's baked in the cake. That's going to happen no matter what. But in the same way that you're seeing coal stockpiling occurring, perhaps because it's seen now, once again, as the strategic resource it is, I believe that you may be seeing a similar phenomenon with uranium, that as people just prepare for greater overall nuclear generation capacity and therefore demand over the next few years.
The physical uranium trust. I mean, it does sound pretty dangerous. Do you know where they keep the rods and everything?
No. These are not rods. This is uranium in a pre
Oh,
sort of
yeah.
pre. It's not cladded, plant ready uranium. I believe. I believe it's intermediate stage uranium, which is which is I believe is the yellow cake stage, which is the one that is very similar. Or the analogy here would be iron ore, which tends to be roughly 62% iron, but is ready to enter the steel mill at that point as it is. It doesn't need to go through a lot of further processing before it's pretty much ready to go. And I'm pretty sure that this uranium trust is intermediate stage uranium as opposed to rod ready, plant ready uranium.
Right. Yeah. I always did wonder because you can speculate on uranium futures. I always did wonder what would happen if you bought some uranium futures and then you decide to stand for delivery. What would be the process for somebody trying to take possession of uranium?
Right. Of course you can't. And that's why uranium, by definition, basically it is a strategic mineral that is going to have a huge amount of regulation around it. it's going to be largely driven by governments and public sector utilities in terms of how it's dealt with and everything. In the same way, in the United States, for example, it's legal for anyone to own a gun, but it's it's not legal for anyone to own a nuke, right? The same thing sort of applies here, right? It's legal for everyone to own a battery for domestic power, but you're not allowed to have a nuclear reactor in your closet. So who knows? Maybe that'll change someday. But no, as it stands now, the uranium market, by definition and by necessity, is a highly concentrated market. But it's concentrated in that sense, country by country. Each country has its own sort of independent facilities to the extent it needs them for domestic power generation. So they all make their individual decisions if they're going to, stock up on uranium, as it were, or not. But I think that's what's happening here.
Yeah. On a related note to that, John, interestingly, with the US, UK, Australia sort of entente when it comes to making these nuclear submarines, it was quite conspicuous, to my eyes at least, that the Kiwis, the New Zealanders were left out of that. Now, New Zealand has been pretty anti-nuke in general. I think it was 1984, they banned any nuclear propelled or any vessel carrying nuclear weapons from entering any of their ports. It's been like that for a long time. And when you think of New Zealand, you're often thinking, it's pretty progressive. They're very open to renewable energy and stuff like that, but they're not into nukes. And at this stage, they're kind of siding with China in a lot of ways. I mean, what's your take on the New Zealand situation regarding nuclear energy? If we just look at the energy side, because you would imagine that a country that's very pro renewables would think nuclear uranium is a great bet.
You would, other factors equal, but you're absolutely right that nuclear power has been deeply unpopular in New Zealand for a long time. And New Zealanders do have some confidence, although it might be misplaced, that geothermal technology is available to them at scale if they can continue to sort of work on the technology and build out the infrastructure. Right. They turn to Iceland as an example, at the opposite pole of the world, right? They take a look at Iceland, which has tremendous, for its size, tremendous geothermal generation capacity. So perhaps they look to Iceland as sort of an example for how this could be done and see it as something that's realistic, although even New Zealand has a significantly larger population than Iceland. So whether that's realistic or not, I'm not the expert to ask, but I am a bit skeptical there. So yes, they've been anti-nuclear for a long, long time. But more recently, they also, as you say, I don't want to say they're cozying up to China, but I believe they're beginning to act like a more neutral power than they used to. Yes. Keep in mind, I believe it was only a few months ago that the so-called Five Eyes intelligence agencies stopped sharing certain types of information with New Zealand. I don't think they've cut them out entirely. That would be a bit rash and would make for bad headlines and whatnot. But I do think they have started to cut them out of the loop on certain types of information. And and now you've got this, right? Now you've got Australia explicitly entering into a nuclear submarine agreement with the US and UK. And yet New Zealand has, who knows, maybe they've expressed no interest at all, but they're certainly not included in that.
Yes.
Now, I'm not sure of how much strategic significance this is. I think it actually tells us more about Australia than it does about New Zealand. That is, you could say New Zealand's kind of doing what it was doing anyway. And as China's influence has grown, that's only naturally had a bit more influence over New Zealand. I think turning to Australia, maybe it's Australia that's beginning to more actively resist that trend of growing Chinese influence.
Yes, which is very tricky for Australia because China's their biggest customer ultimately. But it does feel that it feels like this is something of an intractable problem. So, we're going to have the conversation one way or another. I did see that New Zealand had said, these Australian nuclear submarines, whenever they're ready, they're not welcome in our ports. So they're just continuing with the policy of not allowing any nuclear vessels nearby. But it does seem, like we're just with Evergrande. Now we've got this with Australia. it does feel like we're reaching something of a tipping point when it comes to Western-Chinese relations.
Look, the South China Sea um, is going to be the big story, in my opinion, when it comes to all this geopolitical stuff. We've already seen the big stories around Nord Stream gas into Germany. The fact is, again, people may deny it, but the fact is that Russia and Germany are de facto growing a lot closer as a result of this. And everyone knows that that's going to begin to place strains on NATO and that the US is going to have issues with it. That's all out in the open. That's already happening. That's kind of de facto, it's there.
Yeah.
The South China Sea situation is just getting more and more and more volatile as China gets more and more and more assertive, and as one or more of the countries around the South China Sea kind of see the writing on the wall and are willing to behave in a more neutral way towards China rather than be more explicitly lined up with the US and Japan. And so and Australia. So I think that this is good. This is going to just keep getting hotter and hotter and hotter, and it will be I think maybe the biggest geopolitical issue over the coming decade.
I think we should probably focus on this entirely for a future episode of Southbank Live. There is so much to talk about when it comes to South China Sea. And even though we may be quite a way away here in the UK from South China Sea, when it comes to international trade and plenty of the things that we import, South China Sea is very much a big deal. John, just in terms of sort of closing remarks for our 12th episode of Southbank Live, anything you'd like to leave with our audience?
Well, I think that, again, I think the macroeconomic cycle has turned down. I think the divergence in commodities is telling us an important story there. China's been leading the way, which has to do with the fact that they were the first to tighten credit conditions already late last year. We're seeing the results of that now with the Evergrande default, and we're not sure what's going to happen with that. But I think that things are clearly turning down. Inflation's coming through. Corporate profits are going to get squeezed. You simply cannot pass all price pressures through to consumers. Corporations will have to wear some of them, and those that do are going to be issuing profit warnings in the coming quarters, especially if just the general rate of growth elsewhere in the world, here in the UK, Europe, North America, begins to follow China down, which I think it will. And I think certain leading indicators are beginning to tell us that. It's going to be a rough ride for investors for the rest of this year. And we're only a month away from what I call the witching season, which is mid-October, when a disproportionate number of market crashes historically have tended to occur. We know that Lehman kicked off right around this time, mid-September in 2008, but October is the more common month for major market corrections. So watch this space.
Watch this space indeed. John, thank you so much for joining me. It's been a great discussion as ever. And thank you all for those watching this. This has been our 12th episode of Southbank Live. You're watching a recording of this. Do feel free to subscribe or to follow our Facebook page. And we shall be back again next week with episode 13. John, again, thank you so much for joining me.
Thank you, boss.